Hello everyone, good afternoon. Good afternoon everyone. Today we have a session. I'm thankful to the committee CMI and B for giving me this opportunity to moderate today's session. Today we also have the Honorable Vice President C. Prasanna Kumar sir and Chairman CA Dr. Anuj Goyal sir CMIB with us to give their thoughts on this topic. Before we begin, before we begin this, I would like to give an introduction of CA Prasanna Kumar sir. CA Prasanna Kumar is a true embodiment of dynamic leadership, combining a versatile skill set with an unwavering positive attitude. His ability to inspire and motivate others while navigating changes with ease makes him a standout leader who fosters collaboration and innovation. CA Prasanna Kumar ji has been elected as a Vice President of the world's largest accounting body, the Institute of Chartered Accountants of India, for the council year 25-26. CA Prasanna Kumar is qualified as a chartered accountant in 1984, showcasing unwavering dedication and expertise in the field. He combined his passion for sports with his professional endeavors, excelling as a volleyball player and actively supporting state-level sports organizations while promoting sportsmanship and the Olympic spirit. As a fellow member of the ICF with more than 3 decades of experience, he has completed 2 consecutive terms on the Central Council and is now serving 26 council as council member. His leadership journey began as a secretary of the Southern India Chartered Accountants Student Association, later serving as Picasa Vice Chairman before going on to become the chairman of the Visakhapatnam branch in 2001-2002. As a regional council member, he played a pivotal role in Southern India Regional Council from 2007 to 2016, holding various key positions, including chairman in 2013-14. Now, we would like to hear his thoughts on today's topic. Over to C. Prasanna Kumar sir.
Respected or is not it? I'm audible? I'm audible?
Yes, sir, you're audible, sir.
Okay. Respected CA Dr. Anuj Goyal, the chairman of the County for Members in Industry and Business, and the faculty for this program, and the participants. So good afternoon to all of you. It's a great privilege for me to attend today's program of CMIB for the simple reason that after I took over as the vice president, the first webinar I'm attending now. So it was not a planned one. So it happened, myself and Anuj Goyal sir were together. He requested me just to address all of you. As you're aware, institutes, the main stakeholders are students and members. Among the members, there are 2 categories. So members in practice and who are in touch with the institute on day-to-day basis, and members in industry. It is the desire of the institute to see that the institute gets connected with the industry members in the same way they are getting connected with the members in practice also. In this line of thinking, so many programs are being organized for the benefit of the members in industry. It is always we say, members in industry don't get that you are away from the institute. You demand what you want. We are here to support you. Whichever way you want, whatever the subjects you want to teach us, whatever the programs you want us to conduct. So we'll do that one. That's the way we have been carrying on. That's the reason why various programs have been chalked out. Not only CFO meets, and also CFO, below CFO level also, a lot of meets are organized for the benefit of the chartered accountants. And we also recognize the services, the excellent services rendered by our fraternity in the industry, so that we are giving the awards, 40/40 and CFO awards. All these are there to encourage the members in industry who are excelling there and participating in the economic growth of this country. It's not that only we members in practice do it. Members in industry have a pivotal role they play to see that the economic growth of this country is sustainable, and in the process for achieving the Viksit Bharat by 2047, your role is very, very important. And as Om Birla ji said, the Honorable Speaker of Lok Sabha, in achieving the Viksit Bharat, the economic trajectory of the country, if there is one profession which will see the Viksit Bharat can be realized by 2047 and is going to see India as a developed economy in the world, that is possible only with the support and encouragement, commitment and involvement of one profession, that is the profession of chartered accountancy. And you've got a vital role to play there. So I solicit your support in all the endeavors. And CM Anuj Goyal sir, he is a person, is an action master. He doesn't speak, but he speaks, but doesn't speak, he speaks less than what he does. He is known for that one. So I'm sure under his dynamic leadership, he has excelled in many committees. There are some government committees for which he was made as a chairman. He excelled there also. So that is the capability of CA Dr. Anuj Goyal. And I'm sure under his dynamic leadership, he will take the CMIB to greater heights and to see that all the members in industry and members in business, they will fall in line and get connected with the ICA on day-to-day basis. With this, wish you all the best. Have a great webinar today. Thank you so much, Anuj, for giving me this opportunity to address our member. Thank you so much.
Thank you so much, sir. Hello. Hello. Yeah. Hello. Am I audible?
Yes, you are audible.
Yes.
Yeah. Thank you. Thank you so much, Prasanna Kumar sir, for your kind words. Indeed, we are very fortunate to have Chairman CMI, sir. He's indeed very vision. As Prasanna Kumar sir rightly mentioned, that his actions speak more than his words, and we are very fortunate to have him as a council member. And his continuous dedication is also being reflected by his continuous domination in the council, and the entire fraternity is very fortunate and lucky to have him on board. And for sure, this entire committee is also very fortunate to have him as the chairman. And he will, by the year end, we will all see that how he will turn around the entire committee, and his actions will be visible to us. So I will give a brief introduction. He is a prominent figure in the Indian accountancy profession, currently serving his 5th term as a Central Council member of the Institute of Chartered Accountants. So as he's serving the 5th term, this itself is an indication of what impact he has created since so many years. Throughout his tenure, he has led various significant positions within the institute, contributing to the advancement of the profession. And we will see the advancement in this committee also by the year end. And this entire topic that we will be discussing today around ensuring accuracy in ESG disclosure, this shows that how far-sighted his vision is, because ESG is currently a topic that is being discussed in bits and pieces, but for sure it will have a very larger impact in times to come. And conducting such sessions is itself a depiction of his far-sighted vision and his actions. And would like to share a few kind words from C. Anuj Goyal sir. Thank you. Sir, you are on mute.
Thank you very much, Gauri Mehti ji. I am really grateful, really indebted to our Honorable Vice President, sir, who is a leader who has always led by example, and who is having the grassroots experience and exposure. He started his journey from Visakhapatnam branch, and then as chairman of the Visakhapatnam branch, he contributed like anything as the chairman of the Southern India Regional Council. His contribution was immense. And as a Central Council member, I think 24/7 he has contributed. And now as a Vice President, he is putting his best to see that how we can really do something very concrete for the members, for the future chartered accountants, for the society, for the nation. We are really grateful, really indebted. Vice President sir, in spite of his very hectic schedule, you are very well aware that today we are having All India Management Committee members meet, in which all the central council members, regional council member, branch managing committee members from each and every part of the country, along with CP study circles and chapters, conveners, deputy conveners, are gathered here at Delhi. But this is his dedication, devotion, and commitment and love for all of us that our Honorable Vice President Prasanna sir is amongst all of us. And friends, committee for members, industry and business is a very, very important committee. We are having two resource persons, C. Ankit Maheswari ji, C. Kuldeep Kothari ji, very, very prominent chartered accountants, and have contributed in a great way for ICI. And I'm quite confident that for this committee for members, industry and business, both our honorable resource persons will be putting their best. We are having Anita Suneja ma'am and her entire team of the CMIB, which is really putting their best to see how we can come up to the expectations of the future chartered accountants, or come up to the expectations of the newly qualified chartered accountants. And I'm quite confident that the vision which our Honorable Vice President has given, that how we can have very, very effective 24/7 job portal for every chartered accountant, whether one is in India, whether one is outside India, and it will be very, very helpful for the chartered accountants, but also for the trade and industry, because they are can have the rate the accountant.
Gauri, I think so. There's a network issue. Over to you, Gauri.
Yeah. So I think that it was very great to have his kind words on the subject. I think he's back again.
So sorry, some network problem was there. Am I audible now?
Sir, you are audible.
Yeah. So we are trying our level best that how we can have the HR meet everywhere in the country, outside country, how we can have real CFO meet. Only top brass of the chartered accountants in industry, we can have the very, very effective meeting. And in addition to that, we can have the best of the meetings with the members in practice. So we are trying our level best to see that how we can really do something very, very concrete. You are very well aware that we are having 40 under 40 awards, in which chartered accountants up to age of 40 chartered accountants, bright chartered accountants we are identifying. So our past president Ranjit Agrawal, when he was the CMIB chairman, that was his initiative. So we are trying to see that how it can be further more effective. So today's topic, ensuring accuracy in ESG disclosures, role of CFOs in managing non-financial data. I think it is very, very important. We are now living in that world in which ESG is one of the most important thing. The profitability is very, very important, but to take care of our mother nature, I think it has become very, very important. And the corporate social responsibility is there, that how a corporate can take care of the environment, social and governance, ESG factors. And today we are having the best resource person, Ankit and Kodaji, on and how the CFOs can really do something very, very concrete in the ESG disclosures, and what is the role of the CFOs in managing this non-financial data. So without taking further time, as we are very, very eager to hear our learned guest speakers, Ankit Maheshwari ji and Kuldeep Kothari ji. I'm really grateful to Gaurav Methi ji, a very prominent chartered accountant, who is acting as a moderator also. And I once again put my sincere gratitude to our Honorable Vice President, sir, for guiding us, for blessing us, and we are really grateful to you. And we are having Salini Narang, who now she is in Dubai. She was earlier taking care of the campus placements. So I will request Vice President, sir, to ensure that how we can take the benefit of her expertise in the Gulf countries also, whether it is campus placement, whether it is HR meet, or how we can be in touch with the members in industries, particularly in Gulf countries, through that wonderful resource which we unfortunately not having in the CMIB, but she can help us from Dubai itself. So thank you very much, Vice President, sir, and over to our moderator, Gauri Methi ji. Thank you very much.
Thank you so much, sir. Thank you for your kind words and the idea that you shared on the entire topic. And we are also very grateful and honored to have CA Prasanna Kumar, sir, Vice President, sir, along with us. It was a great start of the session, and it was very great to have you both on board at the beginning of the session. We are very, very thankful to CA Prasanna Kumar, sir, and CA Anuj, sir, for joining this session and setting the tone of the session. I think everyone is whosoever has joined this is enlightened by both of your vision and thought on the topic. Thank you so much, and we are just very honored and grateful to have you on board with us. So now, to begin with the topic, first I would like to give a brief introduction of today's speakers. CA Ankit Maheshwari and CA Kuldeep Kothari, who will be deliberating on today's topic with us. CA Ankit Maheshwari has more than 15 years of experience in financial and non-financial reporting across diverse geographies. He is also a strategic consultant to top listed companies in India, specializing in sustainability, financial, and integrated reporting. He is actively engaged in government initiatives in Rajasthan, serving as a trusted advisor for investment facilitation in the state as well. So he is a renowned author and researcher in finance, accounting, and tax literacy, and he has also published 13 research papers along with C. Kuldeep Kothari as a co-author and a principal author in some of the leading journals. And he has authored multiple compendiums for ICI on financial reporting best practices and commonly found errors. He also acted as a former secretary, ICI Jaipur, and he played an instrumental role in driving ethical and professional excellence initiatives there. Then he was a keynote speaker at national and international conferences organized by ICI, ICSI, and various other industry forums. So Ankit Maheshwari is a highly respected finance professional, thought leader, and strategic advisor. And I'm sure that his insights and his work experience will throw some light on today's topic. Then would like to introduce another speaker, CA Kuldeep Kothari. He also has more than 13 years of experience and expertise in handling and advising listed companies in the field of financial reporting framework, integrated reporting, and ESG reporting in their CBLODR and compliance review. He has a very strong academic background. He was an All India rank holder in CA, CE finals, and CS executive. Then he also was a principal researcher of research study on application of revised formats of financial statements in educational institutions. He did an impact study there. He was the author of books on investor awareness and financial topics for the Institute of Chartered Accountants, co-author of the compendium on case studies and on excellence in financial reporting and commonly found errors in financial reporting. He is also empaneled as a peer reviewer in ICI, and he also acts as a head technical reviewer with ICI Research Committee. We would like So his expertise in this topic will also help us gain insight on how ESG disclosures are and what is the evolving framework of ESG disclosures, and what role CFOs are playing in managing non-financial data. So as we all are aware that nowadays the disclosures is not limited to financial reporting or financial statements itself, but they have expanded, and now the non-financial data has also become equally significant, and rather in times to come it will have more role than the financial disclosures, because ultimately these days companies are also adhering to integrated reporting practices, wherein they have to talk about what is the interlinkage between the financial and the non-financial data. So now, without wasting too much of the time, I would like both our speakers to deliberate on the topic and give us insights on this topic and on today's topic, ensuring accuracy in ESG disclosure and what role CFOs can play in managing this. So would pass on to CA Ankit Maheshwari to share his opening remarks. Thank you.
Thank you, Gauri. Thank you for such a warm introduction. Let me first place my thanks to CA Prasanna Kumar sir, Vice President of the Institute of Chartered Accountants of India. You were truly right in saying that he set up a great tone, at the beginning of the session only, showcasing his vision also and showcasing institute's intent to, connect to members at large through this very important committee of members in industry and business. I am also indeed grateful to CA Dr. Anuj Goyal sir, who chairs this committee and has been instrumental in this council since, I think, more than a couple of decades. And not only this committee, a lot of committees I have worked with him closely, and we see that kind of transformation coming up. I am also thankful to the entire staff of the Committee of Members of Industry and Business, who have seamlessly coordinated for this session and were able to get both the chairman and the vice president to talk to us and talk to members at large. I am most thankful to Kuldeep Kothari, CA, who has been not only a fellow speaker, but we engaged in a lot of projects together on sustainability and ESG, and he was instrumental in giving valuable inputs throughout last 4 or 5 years of my professional life. Not wasting too much of time, I think we are here to set up a very important topic. While ESG, BRSR, integrated reports are coming up, we have a lot to look into the accuracy of the these ESG reports. And to ensure that these reports are accurate, we have to also look at the role of CFOs in how they're managing with the non-financial data. We chose a topic like this because conventionally we all are finance professionals, right? Managing financial data is something, while we acquire this qualification, comes within us, right? But as the world transitioned from, not only financial reporting to non-financial reporting, the CFOs have a greater role to play into it. And how do they manage such a voluminous data, a data on which a lot of trainings are required, a lot of know-how is required. So we decided that we look into most of the ESG reports which are prepared by, I would say, top 50 companies. That's what I and Kuldeep did for last 2 days, and found that where the disclosure requires a CFO to actually look into. And presently, so you'll, in the entire presentation, you'll only have a practice of how a disclosure is given, be it in a BRSR report, be it in an integrated report or a sustainability report. What is expected from a CFO in this particular disclosure, and how it needs to be eventually given. So that's the entire idea. We want a very interactive session. Webinars are sometimes monologue kind of conversations, but we would want more and more questions of yours coming on this side. To be honest, this is all evolving, right? So in this country, you will not find too many sustainability experts. The BRSR framework itself came in 2021, right? And before that, we were having these BRR reports, business responsibility reports. So no, you will not find too much of an experience there, but people have pivoted their careers from finance to non-financial reporting and have acquired this skill. We both are one of them only. No doubt there is a qualification which is required to be added up while you pivot from financial to non-financial disclosure. What I'm trying to communicate is that there could be cases that we agree to disagree. So there might be cases where SEBI's advisory is not proper, or there's no clarification from the regulatory side, and we are still discussing it. But we want to discuss the problems. The idea here is that if through our session we are able to eradicate or mitigate CFO's problems to a certain extent in managing non-financial data, I think this webinar will be a success. We'll try that in next 1.5 hours. We try to give our best 100% and try to resolve maximum problems you face in compiling this data. I'll want my co-speaker to give a very warm, give a quick, I would say, set up a tone of the session, and we will take this forward from here.
Thank you, Ankit. First of all, I would like to place my thanks towards the two stalwarts of this profession, our Honorable Vice President, sir, and Chairman of this committee, CA Dr. Anuj Goyal, sir. And Ankit, I think it is a pleasure for both of us as well as the participants that in the first webinar of this session, we have the presence of Honorable Vice President as well as our dynamic Chairman Anuj Goyal, sir. And sir, I must say that the energy of both of you is unmatchable, and this inspires a lot of young chartered accountants, a lot of practicing as well as chartered accountants in industry like both of us, and those who are attending this session. I would like to place my thanks towards the whole secretarial team of the committee as well as the moderator Gauri Methiji for introducing the chairman as well as vice president and us in a very interactive way. As and special thanks towards my friend, support system and fellow speaker Ankit Maheshwari for setting up the tone and saying some good words about me. We are also learning from you, Ankit, and I must say that if we talk about ESG experts in this country, in this field, your name will be featured in at least top 5 or top 10. I must say that. When you talk about ensuring accuracy in ESG disclosures and role of CFOs, so see, as my fellow speaker has said, that the field of reporting as well as how business was conducted earlier has drastically changed. The role of KMPs, CFOs, CEOs, as well as those who are holding top positions in the company has also dynamically changed. See, when we pivoted from traditional reporting system, then BRR, that is business responsibility reporting, then BRSR in 2021, and since 2023, we are on a roller coaster ride of dynamic changes, various changes which has been brought in by regulator SEBI in various regulations, be it LODR, be it BRSR, be it ease of doing business, be it value chain assessment, assurance, etc. So here comes the important part, that when the environment is changing, when the dynamism of reporting as well as the compliance environment around you is changing, the role of those who are heading the organization, the role of CFO becomes more important. Because see, in this change world, or when we are adopting global reporting frameworks like integrated reporting as well as GRI, etc., you see data collection, data collation is something which is a challenge, which has been a challenge for all entities. And when these changes are coming up in BRSR, changes are coming up in sustainability reporting, etc., I'll reiterate this thing, that India is the only country which has a formal set of sustainability reporting in form of BRSR. So role of CFOs is not only limited to giving CFO CEO certification, managing finance. It has extended way above financial side, and now it has more involvement as well as oversight is required in terms of non-financial or ESG governance oversight, as we all say. The most important thing which I feel that as a KMP or as a CFO, which is required to be kept in mind, is that when you prepare an integrated annual report, when you prepare an annual report, or when you publish your sustainability data, the the importance of consistency, the importance of uniformity, and the importance of a reconciliation of the said data with the books of accounts is something which is very important. And as rightly said by Ankit ji, we tried in past few days to dig deep into some sustainability reports, BRSR reports, and integrated annual reports of those top listed entities, and to figure out that how a disclosure should be made, how it is being made, and what can be the corrective role if it is not done in the right way a CFO can play. With these words, over to you, Ankit for
Thank
enlightening
you.
us with your
I think we had 30
opening
minutes
words.
of 30 minutes of opening remarks. I'll take it because there's a lot of hard work. I'll be honest that what Kuldeep has done throughout this for the preparation of this session. I'll just take you through it. Just for people who have joined or for them a subject is new, we need to understand from where this BRSR or we are talking about a ESG reporting and we're talking about ESG disclosures. So for that, it is important for us to understand what kind of reports are prepared in India and which regulatory framework drives these reports, right? So I'll take a minute on it, and uh, then we move on. Where CFOs needs to intervene, what kind of disclosures, what's the exact format, what could be the probable challenges. India used to prepare a BRR report, which is the business responsibility report. In 2021, India moved on, and India is one of the first countries to have a regulatory framework on sustainability, which comes from National Guidelines of Responsible Business Conduct. And we were one of the first ones to have our own sustainability reporting format, which is reported to a regulator. Not that sustainability did not exist before that, but a lot of countries followed after India, specifically the European countries. So European countries have their own format, which is like ESRS, which you can see on the slide also. So in 2021 came the BRSR, which was mandated on top 1,000 companies in terms of market capitalization to prepare this entire to prepare this report. In 2023 July, BRSR had a sub format, the 9 very critical disclosures of BRSR core, which we'll discuss, which comes from GHG, water, waste, energy, and so on. Some Indianized context of KPIs, which were essentially required to be disclosed. As Kuldeep ji rightly said, that while this framework is still evolving, you have a lot of ups and downs. So SEBI came up with a consultation paper of ease of doing a BRSR, and certain changes were made into it or proposed to. I would say, Kuldeep ji, will you agree to me that these changes are still proposed?
Yes,
Be
yes.
it a change from assurance oblique assessment or a change of how much value chain partners we need to capture, whether it is still 75% or has it moved to 2%. So my understanding, it's a board meeting. Kuldeep ji, if you can throw some light on it straight away, that what this consultation paper came, and we had a board meeting through which everybody in industry is chasing us that when the official notification is to come.
So, as you have rightly said, Ankit, we are in a technical dilemma. I would say not dilemma. It is a technical dilemma in which we all are living. That whether it has been notified, whether it is applicable, what should we do? Even some of the folks are asking that the value chain assessment thing has been done away with. It has not been deferred, it has been done away with, because these are the various kind of interpretations which people are having on this particular consultation paper which you talked about. So what happened in first, the consultation paper for ease on doing in BRSR was introduced. Then the proposed changes, as Ankit ji has said, that first important change was related to value chain assessment, value chain partners assessment. They said that let's keep it at 75% of your downstream upstream partners. Then they limited the individual value chain partner to 2% of your total purchases, and says that is for downstream and upstream value chain partners. The other important change was assessment was proposed to be introduced in place of reasonable assurance, which is there for top 250 listed entities for this financial year. Then the second milestone in this journey of ease of doing BRSR was.
Sorry if I am breaking your flow.
Yes,
can I open that notification itself? This will give
Sure.
them some idea of to what regulator is expecting. In meantime, you start deliberating,
sir.
I'll just change my screen, right? I have this on my laptop. So I thought
Correct,
it
sir.
will be better for
Hmm.
everyone who has not gone through it, that what
Correct,
is
sir.
the regulatory expectation and what we are talking about. It's a minutes of the board meeting, 208th board meeting of
Yes, yes.
SEBI, and they
Yep.
have clarified on certain things, but we are yet to get a notification. And that's a major problem of CFOs today, that what do we actually, we undergo a assessment or we undergo an assurance, because now my problem is for by 25, 26 also,
Hmm.
I
Hmm.
need to, either a CFO needs to choose whether he's going for an assurance provider or an
Correct, sir.
assessment provider.
Hmm.
So sorry, I broke your
No,
flow.
no, it's
I'll
fine.
I'll get back to that notifications for clarity of our learned audience.
So the notification the notification of press release which Ankit ji is talking about is the third milestone in this journey of ease of doing BRSR. Second milestone was expert committee's recommendation on ease of doing BRSR. A detailed recommendation set which is available on the SEBI's website was published and issued for public circulation. Then came the third milestone which Ankit ji has just deliberated in front of us, that was related to ease of doing in BRSR and certain other things also. So in principally, these all changes were approved in SEBI's 208th board meeting held on 18th of December. Then we are, I think, 2.5 months has already been passed, and we are still awaiting this specific notification or circular which says that yes, these changes are now officially enacted. And the main problem, or I would say the technical dilemma, as we said in the beginning, is that not only when you talk about assurance, when you talk about assessment, maybe whosoever has started with assurance, the work has already been started since the beginning of year, and this is where the challenge lies. It is not a one-day job, Ankit ji. It takes a hell lot of process which is required to be followed, a lot of backworking which is required to put these systems in place. I think we were discussing yesterday only. You told that you were traveling extensively for setting up processes in a large listed entity, and this is how time is required. It is time consuming. So it is not about making or notifying a certain change. It is about enacting that change well within time, because see, we are sitting on 21st of March, and 9 days is only left in the end of this financial year. What will happen? See, for example, if value chain assessment or implementation of these ESG disclosures for value chain is not deferred, it is done away, then the situation will be different. If it is deferred only for current financial year, then the situation will be different, because you need to start capturing these data from very beginning of the financial year. Otherwise, you will not be able to put these systems in place well within in between a calendar year, in between a financial year. The same applies to assurance and assessment also, because a lot of homework, a lot of data collection as well as supportings are required to make sure that you get an opinion on assessment and assurance. Having said this, it is fine that that assessment is being introduced and it is notified. Then how an assessment will be carried out, that is also again a question which is under debate, whether it will be more stringent than assurance. I think Nkiji will certainly have a view opinion on this, because he has been instrumental in drafting these assurance standards with the sustainability board. But some people say that it will be more stringent, some people say it will be more lenient, some people say that these changes are applicable for 2425, what we will do. So everybody is in a technical dilemma. So Ankit ji, what are your thoughts on this assessment versus assurance? Do you feel that it will be more stringent, or what can be the change which can be a problematic factor or area of concern for those who are sitting at the top of the entities?
Kuldeep ji, the concern which I see
Hmm.
is who is the standard setter.
Hmm.
And because not only you were, part of that entire subgroup while we were, drafting this SSAE 3000, and we were evaluating the acceptability of exposure draft 5000. One thing which we realized that, Institute was always an independent regulator of an assurance standard. No doubt,
Hmm.
it was a financial assurance standard. I want to touch upon 2-3 things here because we are talking of non-financial reporting. The most acceptable framework for a non-financial reporting today has become integrated reporting, right?
Correct.
And the level of acceptability increases because of IIRC getting merged with ISSB or IFRS Foundation. And eventually now the financial reporting standard maker, which was IFRS, starts preparing standards on non-financial reporting, which is IFRS S1 and S2. Now we see this, they are coming up. Now, the country as a whole, while I was looking at this deliberation, realizes, and it was a question from the ministry also, that whether a financial reporting standard setter can be a standard setter for non-financial reporting. Unfortunately, they took up a decision of setting these standards through a forum called ISF, which is Industry Standard Forum. Now, who are the members of these industry standard forums? Are the industry itself on whom assurance will be done. Now, when I look at whatever material I have of industry standard forum on BRSR, since it was already opened on my laptop, you realize that they're not talking about any assurance standard or an assessment standard. So the government still is in a dilemma whether we should go with assurance or assessment. Yes, they intend to move towards assessment. But the problem statement here is that if even they move towards assessment, worldwide we do not have any assessment standards. I don't know how India will do this global parlance while they want to do it on every front. Because worldwide now what will be an acceptable standard would be ED 5000. Agreed?
Agreed.
Which means that we will have our own set of assessment standards. And how we will compare this to ED 5000, I am not sure. The government wants to be stringent. That's what my understanding of our meetings at ISF or meetings with regulators was. That they want to be stringent. India took already a stringent mandate because while the world is on a limited assurance on select non-financial indicators, I would want to tell my learned audience that India took a mandate of reasonable assurance. Now, government thinks that this reasonable assurance needs to be substituted with assessment. And this assessment will be more stringent than reasonable assurance. And which means that your routine assurance providers who are there might not be able to become a part of this entire ecosystem. What would be the qualifications of assurer or assessment providers? Till we are not clear. But this will be stringent, sir. And the logic of this is because while India was taking assurance on select non-financial indicators, it was in some cases it was done by chartered accountant firms, some cases it was done by big fours, in some cases this was done by private limited entities who were not even duly qualified to give assurance on SSA 3000, 3410, and they still went ahead providing this assurance as a consulting kind of an arrangement without looking into independence. So here there was a strategic move made by the regulator. That's what I feel, that there should be separate standards and separate set of people doing it. So if you ask me, my message to CFOs would be that don't freeze your assurance provider for 25-26. You will see some roller coaster coming here and some major changes. That's how Kuldeepji, I am looking at it.
Rightly said, Ankitji. And one more important change, I think, which came or which is proposed and in principally approved in this board meeting was that if you are reporting your ESG numbers for the first time, that is, it is your first year, then reporting of previous year numbers is voluntary. But but having said this, when you look at this industry standard forum note on BRSR, NKG, it doesn't talks about assessment assurance, etc., how it will be done, but it talks about a lot of topics, a lot of disclosures which were under discussion, which were under debate, that how it is to be done. There was a lot of subjectivity and lot of you know uh, different type of reporting practices were followed by different set of companies. It also said that if you are not able to assess, primarily it is applicable on and it should be applicable on those companies which are into service industry or BFSI sector, that if you are not able to measure your ESG related data, environmental data, then you can do a spend based calculation or reporting. I think extrapolation of data, which you often talk in terms of these banks, in terms of these service industries. So there is a lot of guidance which has been given in this industry standard forum note. But I totally agree and I second your thought that unfortunately or fortunately, the baton has been given to the industry standard forum, the members of which, which are primarily these companies only, and the regulator
They
is
already have to.
probably
They are the people who have to take this assurance. That's
correct,
what I am
correct, correct.
saying. How this kind of a contradiction, I still don't know, but get your point. Right. Sorry.
And I think the regulator is also maybe probably moving. We are living in a world which says that I'll do it my way, and the regulator is saying that I do it as I say. So there is a conflict of thought also, which is there in the mind of those who are working in industry as well as in practice, and those who are regulating this industry. And I think expedited as well as an urgent clarification is required in terms of these changes, because when we talk about value chain assessment, when we talk about assurance, it is not that easy. हमने बोलने को बोल दिया value chain assessment 75%, 2%, but it takes a lot of work for the consultant as well as the company to collect these data, to put systems in place, and to even to fetch this data. For example, I think Ankit ji will be able to deliberate more in this value chain related thing, and we'll start with the industry standard for note. But as small as that, for example, if you are the topmost or top listed entity of this country, that is Reliance Industries Limited, and if you are asking ESG related data from your value chain partner, which may be Aramco of Saudi Arabia, they might say that why we will provide this data to you, because it is not required from their regulatory framework or reporting framework. There is a lot of confusion which is there, technical dilemma which is there, and that's why we want more of your thoughts, Ankit, on this value chain assessment thing, and then we can move on to industry standard forum
Right.
note on BRSR.
So Kuldeep ji, two things, right? Two things very important I see here. One, as a CFO, not as a CFO, in fact, as an entity, it's a problem that how do you capture the aspects. One, a reporting period of value chain partner, if it is aligned to your reporting period, then how do you get data of these value chain partners? That means, as a regulator, you are saying that in March, my value chain partner closes his books. He should be able to give data pertaining to value chain to us if I am the main entity. And I would then compile it through all the value chain partners, assuming if I am taking 2% only, maybe 10, 15, 20, right? And compile it and disclose without a standardized format, because we don't have a format of value chain reporting also. So another problem for our members in industry is, what is the format to do this value chain reporting? Yes, I am assessing it. Assessment was already a part of it. Now I am taking data on it on the BRSR core parameters. Even if I am able to fetch this data, how this data will be taken to my annual report, regulator stays silent on it. Second, when you look at 1.5, they say they are coming on the principles where they want that the company should disclose green credits generated or procured, right? this and its top 10 value chain partners, right? One, my problem is regulator is not clear how much offsetting I can do. Kuldeep, I have this question, and this comes from a very 100% of my green credits, or can I use 100% of my carbon credits? If you if you can answer this to us, right? Because I was not able to answer it. He says, is there any regulatory guideline? How much carbon credit or green credit I should procure? And the way I procure, how do I do its accounting? Because in my principle 6, while I am disclosing my energy consumption, I don't have this right to offset the carbon credits or the green credits from my total energy consumption. Neither the SEBI advisory says me that my consumption from renewable sources can include green credits or carbon credits.
You are right, Ankit, and I think we'll be on the same bus that I will not be able to answer this question because there is no practical answer to this question. Sorry, there are practical answers, but there is no compliance related answer to this question. There is no framework for offsetting, and I think this problem is much bigger for those entities which are in service industry, I would say. This problem is much
Kuldeep,
bigger, which has scope 3.
I had a deliberation on this,
Hmm.
and we concluded something. If our learned audience can get something,
Hmm.
globally offsetting is done for something which you cannot reduce.
Correct.
So don't try to offset it too much. You have to actually show your performances, and you have to actually try and reduce it to the extent which you can't so offset to an extent which you can't reduce. That's a global benchmark. For that's where I am saying that all our members in industry needs to gear up for this. And this indicator also, which has started talking about green credits generation and procurement. Am I audible, Kuldeep ji? Because I
Yes,
have
yes, you
some
are
lag
audible.
from my side.
You are audible, and I
Okay.
think you have very well explained this concept. But you know why I was laughing or I was smiling when you said that it is mandatory or it should be done for top 10 value chain partners. On one hand, we are saying that the value chain partner related reporting has been deferred. On the other side, I'm obligated to maintain some sort of or collect some sort of data related to green credit. So these type of anomalies or maybe contradictory suggestions should be clarified
That's
as
where
soon as possible.
that's where. But I think one thing which we discovered out of this session is
Yes,
offset only to the extent you can't reduce.
correct,
You have to
agreed.
demonstrate your reduction measures
Hmm.
before you do these offsettings. I'll go back to so I think we have reasonably covered what BR from where BRSR comes, the national guidelines of responsible business conduct. How is
Business
BRSR core introduced? And I'm sure that everybody who's attending now knows that there are 9 parameters on which uh, a BRSR core needs to be reported. What do we do of value chain partners? Our suggestion is okay, it is still voluntary. However, you will find a notification, but I don't think India is really geared up or the companies are really geared up, and there is a practical problem in data collection, as I was telling about reporting boundary or sorry, not reporting boundary, reporting period. And in fact, you gave a right example. Why would a foreign vendor even share their data for energy, water, waste
agreed.
to an Indian regulator? We have to think of it. That's a problem where we need to use more tech tools in uh, driving this data. But you will whatever I say, it will not be realistic solution unless these value chain partners are well trained, or they are they're pushed by their own country's regulation to do this. This becomes pretty trickier. But in Indianized context, yes, Indian value chain partners can come on the same platform. Only thing which I feel is that we might have to report the data from January to December in a extrapolating it to March and then further report it. So because I received lot of CFOs in this entire process came to us. So my suggestion was that I am taking April to December data and extrapolating it for 3 months and then finally reporting it. So if there's somebody who is facing this similar problem, that's what the approach which we are using for. I'll go back to the presentation. We have our third, I would say, sustainability reporting framework coming up. Allow me time to share. Just a minute, I'll take and go back to my presentation.
Ankit, one question, if you may permit me to ask on behalf of all of us, that when you talk about extrapolation of data, so is there any specified set limit to which I can extrapolate any data? Is there any limit or any scientific assumption methods which are available?
Kuldeep, I have this presentation coming up, which we discussed for, which we did a comparative for service sector industries.
Yes.
Because for value chain, natural, see, there are no standards for extrapolation. However, ISF says that they permit extrapolation, but again, the standard remains to be ambiguous on that aspect. But whether we should extrapolate or not, one, we'll come on it, and we always have a disagreement on it. But I'll come on it. Allow me just to move slightly forward, and I have parked this question. In meantime, our audience can also put up their questions in the chat box, and we can take that maybe after 2-3 slides. The next framework, as I told you briefly, that comes from integrated reporting. Kuldeep, so Indian companies, 150 companies are doing integrated. I think almost 200 companies are doing integrated reporting. And 200 are doing 6 capital reporting, kind of a reporting, or a hybrid of integrated reporting. The problem which lies here is that now our Indian companies prepare 2 sets of reports in terms of sustainability. In fact, I've seen companies preparing 3 sets of reports. One, a sustainability report, which they say they have benchmarked to a global framework like GRI, CDP, or something else. The other is the integrated reporting, which is the 6 capital approach and the value creation model approach. The third is what exactly SEBI has mandated in India is for the top 1,000 listed companies, which is the BRSR. But from integrated reporting point of view, I have a question also, and there's a lot of work which financial reporting teams and the CFOs have to do as a part of their annual reporting to publish a lot of data in integrated reporting. One top thing I can tell you, SEBI did an analysis for some companies, right? And almost in 50% of the companies, there was data inconsistency between BRSR report, sustainability report, and integrated report. Parallelly, we did a similar analysis last year in the Sustainability Reporting Standard Board also. And there were huge data inconsistencies. For chartered accountants who are here, I would tell you, we call it in a technical terms greenwashing, right?
Correct.
Just like a window dressing on financial side, a greenwashing is, exaggerating your green initiatives without actually having systems and governance and actual things at place. So a lot of effort is put on integrated reporting. Regulator says in, I think, 2017, that's where
Yes, 2017
reporting advisory came.
Correct.
Regulator says that the top 500 companies, right, are expected to voluntarily adopt integrated reporting. And when you look at the SEBI notification, it indicates that this was an alternate to a sustainability report. However, integrated reporting itself evolved, and they don't claim themselves to be a complete sustainability report. In fact, they claim themselves to be capital reports, right? Or a stakeholder reports, right? How capitals are impacting my stakeholders and the SDGs. So a lot of effort of teams are put in to prepare this integrated report. But however, this is still not mandatory, and I don't see any regulatory challenge coming in, barring when this data is compared to BRSR. That's where the problem is, or when the data is compared to some other sections of the report. Another problem which Kuldeepji I want to highlight to our audience here is, or maybe I'll park it for later, how many CFOs reconcile their sustainability data with financial data? For example, you disclose your energy consumption, you disclose your
Correct.
waste, because you asked me to extrapolate a number. Now I am telling you what's the background from which I am coming from. I extrapolated, say, my water data on the standard which is prescribed by India, which is 45 liters per
45
day.
liters per person per
Correct?
day. ठीक, correct है.
Now my water consumption is 45 liter. Sorry, my water intake is 45 liter as a human, and 80% the standard permits me to consider the consumption. Does my water bills in any way correspond to the water consumption I have reported? Companies in a very robust practices say we are managing our waste 100% effectively. We are doing 100% sustainability procurement. Does your accounting systems also resonate to the same? And that's another issue which I want to bring to the people who are from industry here, that please make sure that whatever you are publishing in your sustainability reports should reconcile from your financials, right? So overall, Kuldeepji, I think we are done with the frameworks. If something you want to really add up.
Many you have rightly said. One small thing that I would like to mention, and to all those who are looking at these reporting things and who are heading these departments should look into. When you talk about global reporting systems, you talk about integrated reporting, you talk about CDP, ESRS, GRI. My suggestion will be, and I think it will be our suggestion, that if you follow one framework at a time, then it will be an ideal thing. That let's not mix it up. See, if you are preparing 3 reports, let's not put at one place that you are benchmarking GRI, at one place you are benchmarking IIRC or IFRS Foundation, and BSR is something which has no option. So there is a lot of anomaly in data, inconsistent data, which you have already highlighted, which we see in integrated reports, which we see in sustainability reports, or ESG data packs, as they call it, and BRSR report. And the reason being, why I say that BRSR reports may be more reliable, because it has an assurance framework which was associated with it. And that's why I think Ankit started with straightforward with the assessment and assurance thing, because that's where it comes into play. So it is not, your job is not done when you do an integrated report, or when you do a sustainability report, you publish your ESG data pack, etc. Your job is to make sure that whatever you are publishing is in sync, be it stakeholder engagement or materiality assessment, be it your risk related disclosures, be it your non-financial data, and as Ankit has said, be it reconciliation of your non-financial data with the financial data. It is very important. And one small example, Ankit, as you mentioned about water. Last year, if you remember, we were calculating that purchasing power parity, and we were trying to divide the revenue by 22.4, and we were not able to get an same answer in yes. If in 10 companies we tried doing this, and we found different answers, because different sort of formulas were used. And there was no other way in which you can calculate purchasing power parity, or you can convert your revenue into equivalent to US dollar. That the rate which is prescribed by IMF is 22.4 only. There is no other way, but still companies did everything in a different way. And that is where I think the role of leadership is important. The role of leadership is to give a thought that let's do it this way, let's not mix many things. And one more thing which I feel is important, when you talk about materiality assessment, you talk about point number 26 of BRSR, that is part of section A, and you talk about the SEMA section of integrated report. It is advisable to all these listed entities that, shift or move towards double materiality if you have not done it, because it is more holistic and it will serve the both intention of BRSR, because BRSR requires you to give you financial implication. It is in a way it is a double materiality assessment, and it will serve the purpose of IR also. So with this, over to you, Ankit, for that reporting boundary point that is very important, and I think many companies do it in a wrong way.
Only thing is, because you were talking on something and we had it on our slide, I see one
Yes.
a stakeholder engagement and materiality assessment of a BRSR is different from a stakeholder engagement and materiality assessment of an integrated.
Agreed.
So my concern is here, the company in a regulatory report is not reporting it. Instead, it is reporting it in a voluntary report, which also they should not do. Any report which you build up comes out from a different framework, comes out with different expectation. BRSR is not a stakeholder engaging report. However, an integrated is a stakeholder based report. That is why what Kuldeep was actually trying to deliberate is that do a double materiality, but don't only do it from integrated or don't only do it from BRSR point of view. In fact, I see a lot of companies, Kuldeep, who are showing in their integrated, they are showing ESG metrics. Their ESG material matters do not correspond to the BRSR material matters. So this is something which needs to be worked upon, and I'm sure that this is a subject which we can have a complete session on through you on a stakeholder engagement and materiality assessment. Probably everybody, top 10, 15, 20 companies. You want to say something?
Yes. One question on behalf of all of us to you, that when we say this, the materiality assessment for BRSR is different and materiality assessment for IR is different, or sustainability report will be different. So can we say that whatever you do, if you are doing double materiality in IR, can be applied to BRSR? Is it correct? And when I say that whatever you do from BRSR's perspective cannot be applied in IR, which sentence is true, first or second?
So whatever you do in BRSR, you can't apply it for IR. This is sure. I have a sure answer for one thing. But whatever you do from integrated, once you do double materiality, that means you are doing your you're clubbing your financial materiality with your sustainability material issues. And where this meets up, right? These are those material issues which can be taken to BRSR also, because they are already they're already considered while you are assessing your climate and all those sustainability related risks. So that's what my understanding is. If you have a different opinion, tell me.
No, I agree with you. You have rightly said that, and maybe this is a complex question which you have answered in a very lucid way, and we like to have a lucid answer about this reporting boundary problem also, which many of the listed entities are facing.
So Kuldeep, nothing against any entity, right? That's something which I want to say. They are public reports. We have just taken screenshots.
Correct.
Everybody is doing wrong. The problem is this: not that everybody, I can find, or we together can find any report and find some problems into it. So intent is not that. But I have taken a reporting boundary, which says that my reporting boundary is across offices and branches. My request is, as a CFO, the methodology to determine this reporting boundary is a lot of your responsibility. So the regulator, in fact, the XBRL format of this ESG report or the BRSR report permits you to only mention consolidated and standalone. So one, as a CFO, please define your reporting boundary. You may have exclusions and exceptions to it, but the reporting boundary has to come from the financial reporting boundary only, the standalone and the consolidated. I have seen companies reporting in their standalone consolidated numbers and vice versa. While it comes to non-financial data, financial, I have never seen such kind of an instance. So one, I think we have to look into the reporting boundary as a CFO before we prepare be it an integrated report, be it a ESRS report, be it a BRSR report, any sustainability reporting, a CFO has a lot of role to define these reporting boundaries. That's where you start deciding from which place, from which company, from which subsidiary, from which step down subsidiary I'll be able to gather my data or not. And that is why every reporting, be it integrated or Kuldeepji, be it BRSR, right, in India, BRSR also ask you what are your subsidiaries, also ask you what is the percentage you hold into that subsidiaries. Integrated also ask you the group structure and ask you to report on your why they're asking it, so that somebody who is reading this data knows that this is for these particular entities. And this is, I would say, in 20% of the BRSR, this reporting boundary is still not coming out to be aligned right, and in 50% it is not standardized. So we have two examples here. I think the second one looks to be more comprehensive, but again, the company has confused whether they are on standalone or consolidated. So they say they are both on standalone and consolidated basis. Uh, we would recommend to have a clear stance. To my understanding of this company's report is they have reported on consolidated. Only at certain places there are certain exclusions which they have specifically mentioned. So that's one thing. The another point is I have taken this assurance thing because companies are going with limited and reasonable assurance mandate. Reasonable, uh, I have seen couple of companies in top 150 market cap, because that's what we have today in our hand. They had to take reasonable assurance, but the entire mandate was given for a limited assurance. Now, when you look at this line, you will assume that, reasonable and limited both can be taken. No, you have to take as a CFO, it is your duty bound to take reasonable assurance for 9 select parameters of BRSR code and limited assurance for any parameter which you want yourself to be assured. However, regulator feels the importance of 9 parameters only. I think we should go with that particular thing. Rest, let the assessment standards to come and then we decide. Another important thing, Kuldeepji, where I think, so now we'll have some disclosures in BRSR to brief our audience at large. In India, if we are doing a regulated BRSR report, it has 3 sections. Section A is general disclosure. Section B is management and process disclosure. Section C is principle wise disclosure, which has these 9 principles. In each principle, you have an essential indicator and you have a leadership indicator. An essential indicator needs to be filled essentially, and a leadership indicator needs to be filled on comply or explain basis. Not that voluntarily, if you're not filling it, you have to still explain it. However, in Indianized context, we still find a lot of BRSRs which are more on explain or comply basis, irrespective that they are essential indicators. And Kuldeepji with his efforts have found certain examples where these are essential indicators and people are still not reporting the data. As of now, we are talking of general disclosure. Your material issues, your reporting boundary, or what you see on your screen, which is your product services, right? Here, I think the CFO had to pitch in this company and tell that the turnover cannot be 72, 65, 22, right? The cumulatively turnover can maximum be 100%, right? So in service sector, sometimes these kind of confusions happen. Whereas when you see the other company, right, which is just below it, you see that they have accurately reported it. Even if this company have reported sale of steel products only to 94%, they would have complied to the disclosure requirements. But this is a financial data. This should come from finance team, mapping their segments and products and matching them to the NIC codes and report this accurately. You find a lot of reporting problems here. Anything, Kuldeep ji, you want to add it up? You're on mute.
I,
You're on mute.
I was just wondering when when you showed that screenshot of dissection of turnover, neither of the three reported categories are more than 90% or 90%. And I don't know how it has meshed with, I think the same sort of reporting requirement is there in MGT 7 also. When you do
Right.
your ROC filing, these NIC code-based turnover is required to be reported in MGT 7. So it is very strange. One more thing to add up to the reporting boundary thing, Ankit, one type of anomaly or contradictory statement or contradictory reporting which we have seen while doing these reports is that on one hand you answer the question of your reporting boundary in consolidated manner, that you say that I'm doing the reporting on consolidated basis, and there is a follow-up question in this section A only which asks you that your shareholding etc in your subsidiaries and associates, and it asks, there is a column which says that whether the data of this particular subsidiary is included in your BRSR report or not. So on one hand you are saying consolidated basis, on other hand you are putting up answer as no in the same section within a difference of 2-3 questions only. So this is also something which is required, and these reports are assured also. Very strangely, these
And
reports
the
are assured
assurance,
also.
assurance
Yes, yes,
provider is providing assurance on this
yes,
indicator
yes,
also, a
yes,
limited
yes.
assurance.
Limited assurance. So this is something which is very strange, because the ultimately the liability in the end of the day will be of a CFO or a CEO or those who are heading these departments. These assurance, maybe if I am the assurance provider, I'll be taken care of by my regulator, which is ICI or some other government regulator. But ultimate responsibility of the data which is reported, the moral responsibility of the accuracy of the data towards investors is of CFOs and CEOs and the sustainability heads only, NKJ. So I think we can move to the next section, because we are running short of time and will not be able to cover all the screenshots or all
So
the
this straight
data
question,
explosion.
straight answer. One question, one answer.
Yes, yes.
Whether do you think a CFO has a role in setting up targets, ESG targets for the company? What role he has
Hmm.
in measuring these targets
Hmm.
for a larger company? Because what I have seen, while you take a target, you have to make it align to your financial goals also.
Correct, correct.
You say that I have seen companies taking 100% green energy initiative or a renewable energy initiative, and then from next year they said that we don't have that kind of budgets.
Correct.
So a lot of thrust needs to be all the targets which you take. I would not say performance, but at least the targets which you should take should be in complete alignment to your finance vision is what I feel. Anything you want to add it up, but I think sometimes even the largest companies keep their finance controllers or finance guys out from their ESG committees, right? Even
Right,
if it
right.
is a part of board, right? Somebody has to be there having that financial acumen and correlating these targets to the budgets is what I would say. Otherwise, you have to take them back, and then it appears to be ideally, companies have reached to a stage where they want to take SBTIs. Kuldeepji, if for learned audience, if you can tell what SBTIs are actually, and then we take this forward. But my point is that companies are customizing their targets as it appears to be ad hoc, and a lot of non-compliance on SBTI. If one line you can talk about SBTIs.
I'll say 2 lines about this. SBTI is nothing but it is science-based targets related to your environmental, goals, environmental operating ecosystem only. And why people or companies tend to move towards SBTIs and why it is more important, because it is more holistic. It has more, proper understanding and basis enclosed to it. So if somebody says that let's take in carbon neutrality target by 2030, 2035. So I can say anything that I'll be the richest man of this world tomorrow. But if I say something, there has to be some science or some logic associated to this. So when you take any target, when you set any goal, there has to be a proper assessment, scientific assessment, which is required, and that is where SBTIs comes into play. Can you move on to the previous slide, NKG? I have one small point to make,
Sure,
and
sure.
then. So when you talk about role of CFOs, when how they play a vital role in setting up these target or environmental related initiative or ESG initiatives. When you talk about environmental viability, now you need to assess the financial viability, and you have rightly said that if you take these finance guys or your finance process out of this ESG committee or out of your ESG target setting things, then these targets are bound to be taken back. Then there may be a case that somebody says, see, as a consultant, you and me will go that let's take in green energy, etc. You buy renewable energy. Then the finance guy will say, Ki Baba, it is costing me more than what it is costing if I'm buying the grid energy. So my finance guy will say that you do all these initiatives on paper reporting, etc., but it is not financially viable. So if I say something, it has to be financially viable, as well as there may be a case that it has more cost associated to it in shorter time horizon, but it should clearly show that how it is going to benefit the company in longer time frame in terms of bottom line also. So if you talk about people and planet, there is a balanced approach which is required to be taken care of about profit also, because without profit or without cash, you'll not be able to invest into these activities.
No, I think completely aligned to what you said, and that's where I think sometimes the leadership needs to be sensitized instead of our fellow members to involve in target setting and performance measuring. The next slide just had I found it most ideal slides of whatever we have gone through as to how companies are able to depict their targets also, move towards carbon neutrality, how they are aligned to the original Paris Convention and the Indian commitments and the global commitments. So I think that's how target should be. That's how, and these targets are taken only while the finance professionals really supports this ecosystem. Kuldeep ji, I think on general disclosures, what we found where a CFO needs to really pitch in or a finance guy needs to pitch in is naturally, what we have discussed, be it targets, be it performances, be it material matters. And at in some lines, we in these screenshots, we also had management and process disclosures, where I think not CFOs, but at least your internal control teams or your risk team is the team which needs to design the section B of the report. And then you are followed by section C. In still lot of cases, the policies which companies have are not, or the processes which companies have, or the procedures which companies have, these policies are still not aligned to each of these 9 principles. So for each principle or multiple principles, you should have policies aligning to meet the objective which are laid by the 9 principles in principle-wise disclosures. I am moving ahead, and here I told you that we had an essential indicator which we had to indicate in principle 1, which is the openness in business. And Kuldeep ji, this is a published report, right? And the company fails to disclose any data on concentration of purchases, any data on concentration of sales, and the only data which they have come out is share in related party transactions. As finance professionals, unless one problem which companies faced last year, I can tell you, Kuldeep ji, it was that companies was not geared enough. This came in between of the year, and nobody took it very seriously. By the time the year starts getting closing, year got closed, companies realize that certain numbers they can't fetch it. For example, purchasing from trading house as percentage of total purchases, unless you mark these purchases in your SAP or your ERPs through configurations, then only you can take this output report. But number of trading houses from here purchases were made, all this percentage from top 10 trading houses as percentage of total purchases, all this data was very important, and companies failed to report it. Companies who had more robust practices were able to, come out clearly on it, and there had to be a previous year number also which needs to be mapped. That's a disclosure. As finance fraternity, I think we need to work upon it. Anything you want to add, Kuldeep ji? You're on
I
mute.
just wanted to say that when you talk about this essential indicator in principle one, openness of business, the main problem, Ankit, I think you will agree to this, in last few years was that people were even not aware about the definition of trading house, what a trading house means. This was, see, the clarity of thoughts or the clarity of terminology was something which is the problem number one. Problem number two was, integration of all these parameters, all these indicators in your SAP or whatever systems you are using. And you have rightly said, when you talk about a company like Reliance, when you talk about a company like HDFC, when you talk about a company like HUL, or the company whose disclosure you have sent, just shown, it is not possible to collect or collate or manage these data manually. It has to be a tech based solution which should be there, and integration of these all indicators in your accounting system, whatever accounting system you use, SAP, be it Finacle in banks, etc., whatever you use, it is very important. And there is a detailed description of this concentration of purchases and this specific disclosure, which is given in industry standard forum notes. So if somebody has some sort of confusion that how to calculate the purchases or sales related to trading houses or dealers, distributors, etc., then you should go and read that specific disclosure of essential indicator 9 of principle 1 in the industry standard forum note.
Okay. So should I not go to the ISF?
We
can move ahead.
Yes, we can move ahead. I think it will be in the interest of time, I guess.
Okay. Then again, some indicators I think which needed to be worked upon, right? You were talking of value chain partners. I am coming on a report where companies have not started even creating awareness and assessments, right? How will you start doing a value chain reporting? These are last year reports only. I'm not talking of, and companies think if they can answer something qualitatively, I don't think, see what exercise has been done by the regulatory side, you will find some things coming up. I sense those things coming up. As finance professionals, we need to, gear up for having more quantitative numbers. That's where the problem is. Are we saying uh, we can't assess the value chain partners? I think we already had a supplier code of conduct policy in place. Already through that policy, companies were already being assessed. Value chain partners or suppliers were already as a part of audit. Maybe it's time to collate more data and integrate it to the sustainability initiatives if you want great, better disclosures. Again, nothing. Company is
Nothing.
in terms of awareness programs, companies saying nothing about it. However, you see, that's between an ordinary disclosure and a great disclosure. You see companies coming out, not necessarily that you do it for 100%. You have to take certain initiatives. How many training programs, which principles were covered, which topics were covered, I think shows you the kind of difference. It's eventually an end outcome which anybody can write. Writing it is not a problem. Collating the data, collating the records, asking your HR to keep these records, reporting it to you, and finally you taking it to this indicator is what is expected to be done. Important indicator, Kuldeep ji, if you can cover this up. I think this is where this is a gray area, and if you can cover this up, would be some help. I'll add up to what you say.
So, what is there in your screen is the essential indicator related to disclosure of R&D and capital expenditure, and why it is important. Why Ankit said that it is something which is to be taken care of, and it is relevant for a finance professional. Why it is relevant? Let me tell you two instances. The very company which is there on the screen says that there is no R&D expenditure for current year and previous year. The question number one will be: is it possible? in my opinion, the answer will be no. It is not possible that your company is not having any sort of R&D expenditure. Why it has been reported like this? The probable answer to this again lies in integration of these indicators and how you are accounting it for. So it is very important. The role of finance professionals becomes very important at this place, because when you ask any sustainability professional what is R&D expenditure, I can have a journal definition to an research and development initiative, but it has to be in specific thing which should be recorded in your books of accounts, and whatever you are reporting in these parameters, mind my words, these are essential indicators. So if there is an essential indicator, then it has to be done on explain or comply basis. So no R&D expenditure for current and previous year is not an correct explanation. But if you report, say, any XYZ number, 2%, 5%, 10%, then it has to be reconciled with your books of accounts. And the same thing applies to capex also. So here capex doesn't mean, I have seen in some cases, though it is very clear, but in some cases people are putting up the total capex percentage here. So it is not that the total capex percentage is required to be put in here, because if you read the heading of this particular indicator, it says that any capital expenditure in specific technologies to improve environment and social initiatives. Again, the question or the problem lies in collection of this data at the ground level, how it is being entered into your accounting softwares, how it is being entered into your ERP, SAP systems. Otherwise, we'll not be able to, correctly extrapolate or correctly demonstrate this figure in these indicators. One additional thing before you clarify in detail.
No,
this
please
for
take
us.
your time. This is a very important indicator, and I'll tell you why this is important for CFO before you further elaborate it. It has a direct correlation with your green finance.
Correct. So there has been a detailed explanation which is given in the industry standard forum note. What can be included in R&D expenditure, what can be included in capital expenditure, and it clearly says that it should be in reconciliation with the ledgers which you are maintaining and your audited trial. So the responsibility in these indicators clearly lies with the finance professional. And I was, Ankitji, wanting to make this point in earlier disclosures also, which you have shown, that when we are moving from normal financing system, normal leverage system to green finance or sustainability finance, the role of assessment assurance as well as these data becomes more relevant, because the the fund provider or the finance provider will certainly look into these things, and if they found any sort of mismatch between this data, then maybe it will be termed as greenwashing, as you have said earlier. And greenwashing, as you told earlier, can be of two ways. It can be intentional and it can be unintentional. So you cannot escape from this particular initiative and saying that Arey, mere ko to pata nahi tha, it has happened unintentionally. So it can be intentional, it can be unintentional. That's why it is very important that whatever you are reporting, whatever you are recording before reporting, has to be taken care of. Over to you, Ankit.
Interestingly, for the first time, regulator acted. SEBI issued a show cause to a company who somewhere in their annual report says number of lives impacted X, and that was 0.10x in BRSR. So not that regulator is not assessing it. Apparently, if you do something gravely wrong, they are doing it. In terms of R&D, I think you have deliberated it pretty well.
Correct.
You want me to go to the ISF note for this, because this is a lot of confusion. I have received a
Yes,
query.
we can. Yes,
what do we include in R&D?
We can do that.
Just give me 1 minute. I just have to share a different screen.
And when you talk about these R&D expenditure, capex, etc., or there are confusion, Ankitji, as such as that what do you include in revenue? It clearly some companies are including other incomes also in while calculating some of the base factors for these disclosures in revenue. So there is a lot of clarification which is required. This is related to this is related to MSME.
this is principle 2, right?
Yes, principle 2.
Just give me a minute.
Maybe
Am
it
I
is. Yes, you are opening. Maybe it may be a case that it is there in that expert committee recommendation. So we can, whatever we can share it later on after the session also.
Okay,
If
let's
you-
not
if
let's
you-
not
yes,
waste too much into it.
because there was a
No, got
expert
it.
committee recommendation paper in between which was issued.
And the data in principle 1 pertaining to accounts payables also needs to come from the finance team only, right?
Correct.
Got it. Okay. Now
And
we
these
go.
are the indicator based on which your green finance provider will assess you. So, Ankit ji,
Absolutely.
do you think that the answer to details of improvement in social and environmental impacts can be any, or
It is completely applicable to irrespective of the set of industry you are, right? Uh, see, I was doing for an insurance company these calculations,
yes,
and we did a lot of R&D on assessing whether we should underwrite carbon projects or not, right? And eventually, through that R&D, we decided that we will not underwrite carbon projects. And these will be our new products
correct.
for underwriting green products.
Hmm.
We booked all that expenditure under this head, and this eventually gets reconciled with your books also to a larger extent. So, if you think you are a service provider, I think the service providers have this ability to think that these are not applicable. For example, life cycle assessments. You read the SEBI guidance note, right? Services have life cycle assessments, right? Depending what you are offering as a product with service. For a bank, a checkbook or a credit card could be a area of a life cycle assessment, or an area where a packaging needs to be, or how do you get it back, right? An indicator. So a lot needs to be done over it, but completely agreed to you. Let's move on the next point, which again comes from the finance team, which is sustainable sourcing, right? Again, a point which is very related to trading houses, in the way that if you are not marking your supplier, whether it is a sustainable supplier or not, you will never be able to quantify whether you are sustainably sourcing or not. Friends, a qualitative disclosure here will not suffice. What will suffice is a percentage of sustainable sourcing.
Correct.
Right? Like in this case, even this is not the most accurate disclosure, but the company is able to demonstrate that they are sourcing this particular vegetable sustainably, right? The definition of sustainable sourcing is very clear. The only point which you have to indicate here is you have to mark your supplier whether this supplier is a sustainable sourcing supplier or not. Anything you want to add, Kuldeep ji, you may add it, please. Right. Next is another indicator, which is that you want to add something to sustainable sourcing.
Yes. I think if you can open that industry standard forum note now, if you will be able to recollect that when we were evaluating those BRSR reports, etc., we found a lot of contradictory disclosures in this sustainable sourced material, etc., what to be included. Some people were saying that services will not be included. You remember in that session, one person asking whether my interest cost, if I'm into an BFSI sector, will be my input material. You remember na that question?
Right.
Somebody asked, and we didn't had any answer at that time, because practically it should be, say, if it is a service industry, then whatever input services I'm receiving will be my material or services, whatever only. It is there in this.
Where it is? I don't know whether my control if
It is there in, you write capex or you write, services. You write services. This is energy.
this will be too much.
BRSR, this is services. Services, you'll find this in services. So this says that yes, this definition applies to this sustainable sourcing also. So when you talk about
Okay.
this is specifically related to MSME, but they have defined the input material and total, purchases, etc. So it says that input material or total purchases shall include all type of procurements. So it includes
It
material,
includes
space, services.
services. That's the point
Yes,
you're coming from.
yes, correct,
Okay.
So
Got it.
it answers the question which we had 2-3 months back from that person from BFSI sector, or which we often, this problem is more evident in the service industry when somebody is saying that I am sourcing 100% of my input materials or whatever from sustainable sources. Somebody is saying 0.04, somebody is saying 40, and somebody is
And
saying 100.
somebody is saying product wise.
Product wise, correct.
So you have to give your gross purchases
Correct.
versus sustainable purchases you have procured.
Correct.
So got it. I think you gave a very great perspective through this.
And
Let's move back.
why I
Yes,
remembered this, because you were the only person who pointed out these differences, that somebody is reporting 100, somebody is reporting 40, and in the same industry, somebody reported 98 and somebody reported 9.8.
Got it. So this is another area, right? We move ahead. I will not take much of time into it, but I think there is a problem while we are calculating this total well-being figure, and lot of companies are not. This is a right kind of a disclosure. Cost incurred on well-being with total revenue of the company. The well-being here is very clear as per the guidance. It includes your health, accidental, maternity, paternity, and daycare facilities. And you have to quantify this and reconcile this through your accounts, is what our suggestion is in principle. Kuldeep, anything you want to add on it? Else,
And
I'll come
again,
on this comparative analysis, right?
again, one small thing which I want to mention here is that there is a clarification which is given in this industry standard forum note regarding what will be included in the well-being spend. So
Correct.
it says you need not to open that industry standard forum note. It says that it includes your health insurance, accidental insurance, paternity benefit, maternity benefit, daycare benefits, as well as it includes if you are extending any benefits related to mental health of the employees. And then it talks in detail what will be included in salaries and wages, what will be in, for example, staff and welfare will not be included in salary and wages. So it has a detailed explanation. So this figure looks very minuscule and very minimal, but it is very important how it is calculated, because it will be then directly linked to your audited trial and ledgers.
I think we discussed that point, and that's where the background I'm coming from, right? We tried to do an analysis where we tried to compare one sector only. We couldn't take all sectors, right? With almost all banks. Now, something which I want to highlight to my learned audiences while we do this comparison, Kuldeep ji, we should really look at energy intensity per rupee and look at the variations. My friends who are new to this is our principal sakes. What we tried doing this comparative analysis for a particular sector, and we found that there's a huge disparity of your energy intensity data in same sector per rupee. And if you look at per location disparity, then this disparity appears to be crazy. Now, the point which I am trying to highlight is, as a CFO, I don't know which bank will be comfortable, but as a CFO, we should actually try reconciling our energy numbers with, because energy, out of energy, water and waste, energy is the only data which I have maximum confidence on.
Correct.
Water and waste, I know there is a problem specifically for irrespective of the nature of the entity. But energy should reconcile when they are not reconciling within the peers. And when I started looking, so what I did further, Kuldeepji, I multiplied the average rate of electricity and went on the finance side, and I did not found a single figure getting reconciled.
Correct.
Right? Not close to it, not even 30-40% variation is also I was able to accept. That's where I think as finance professionals, we need to pitch in. If we are assessment providers, if we are assurance providers, if you are report preparers, this is something which needs to be taken care. And Kuldeepji, we did a similar analysis for all kind of environmental metrics. Look at the variation between my scope 1, scope 2 intensities. Are you saying 5.51 metric tons to 49.47 for a same kind of a bank?
Mind-boggling.
And when you look at,
if you compare 5.5, sorry for interruption, we compared like UCO with whatever, I'll not take the name, 5.15 to that 29.08, because the number of branches or number of location is almost same.
Exactly. But even if it is not same, I am looking at my intensity per unit of turnover. How my per unit of turnover? So somebody is on 3.1 and somebody is on 1.26. This is 3 times intensity which we are reporting.
So you are saying that the problem is related to extrapolation? Sorry for interruption.
The problem is related to 2-3 things. One, the reporting boundary. While one organization is not covering the entire operations, even they are saying they are on standalone. Standalone would require you to cover entire operation. If you extrapolate by any chance, because ISF permits you extrapolation, and I have a water consumption matrix which eventually says only Bank of Baroda is on the right parameter.
Correct.
Or maximum I would take SBI and IndusInd also. But how, as per a standard, now my water consumption or water withdrawal matrix should also reconcile with my accounts is my second set of problem. And this problem cannot be grossly stated like this. I have larger problems where these banks have to lease premises, they have some inclusive cost, they might not have systems to capture. That's where this session is kept with these kind of variations. That as a CFO, did you set up the systems
Correct.
where your intensities on environmental parameters corresponds to intensities of your peers and reconciles to the books? If that's there, I don't think there would be a problem. Otherwise, you see companies even not reporting certain things. Are you saying that IndusInd and Union Bank does not generate plastic waste?
Not possible.
So
Not
there
possible.
is a problem which somebody has to, we as finance professionals have to do these comparisons. We did it, we found it, we have done a comparison to accounts also, finance also, books also, their ledgers also, and found that I think the finance teams were deficient in implementing systems to capture all this in their trial balance.
Ankit ji, before we move on to the next slide, because we are running short of time and there is a lot of thing which is required to be covered, maybe we'll have a separate session on this also. There are a few questions. If you permit, we can take those questions and then we, if the time is there,
when we wind up integrated, we have already covered it.
covered
Right.
it.
Right. So I would want that we only take questions from now.
So question number one is from Mr. Jayachandar from Infosys. He says that NSE has released industry standard level guidelines, integrated guide to BRSR. Can you provide your views on that?
So, Jachan, I would say that yes, there is a. I think we were discussing that notification also of ISF. Parallelly, I have a view that in terms of what industry standard forums have to give was an assessment guidelines which I did not found it there.
Correct, correct.
They were entrusted to give guidelines on assessment, and other than that, uh, I don't know why ISF is coming up with various set of guidelines, but the guidance comes from. If you ask me, I would take the guidance only from the SEBI advisory while I am preparing the sustainability report, except for my assessment standards. Kuldeep ji, you have a different point.
No, I am on the same page, but I just wanted to add maybe the industry level guidance which Jayachandar ji is saying now. It is, Ankit ji, if you remember, it is the old circular which was issued, which a year back we were figuring out about some guidance and standard notes, and we found that it is the old circular. Post introduction of these changes into BRSR and post this press release about industry ISF note on BRSR, which was published on 20th of December. There is no industry level guidance which is available. And having said this, I am totally on the same page that there is only one standard. The regulator standard is required to be adhered to. No other standards are required to be followed. The other question, Ankit, comes from Mr. Prateek Bhandari. He asked that how is India placed in terms of regulations, in terms of, maybe he's saying in terms of ESG domain only versus global peers.
So in terms of Pratik, it's a subjective answer, but in terms of setting up a standard, I think we were good. In fact, while this BRSR was drafted, we benchmarked to lot of global frameworks, be it GRI, CDP. In fact, when you see NSE's advisory, sector-wise advisory, it is very clear that NSE also tried to benchmark it to the global standards. We are also evolving as the globe is evolving. Our problem is not on setting up the framework. We set it up very well. In fact, I'll go back to the background of 2015 where we aligned ourselves in Paris Convention and we chose to be different. Like what today Donald Trump is saying, our government already pushed this in 2015 that we will take our time and own journey. We still occupy only 5 to 7% of the carbon space, which means that there has to be some fossil fuel which we need to burn. I don't deny that fact. Even we're discussing a sustainability session. But while the new president in US comes, he's very clear about it that diversity, equity, inclusions, whether we should eventually take it or not take it. Individualistic views, but India aligned this framework very well, mandated in a very smarter way, mandating top 1,000 companies, mandated assurance with a glide path, took a reasonable assurance, then got a little confused with assessment, but in totality, they were able to demonstrate well, but on reporting they failed. The reporting is a substandard reporting. If you look at this, very few top companies are able to have those kind of budgets. People still think it to be a compliance report instead of looking into accuracy. More importantly, more importantly on the value chain, the value chain was mandated that from top you pick 1,000 and then you pick their
correct
small partners and get these emissions consolidated at a national level. I think as of now this has become a GST kind of a thing, right? And a little government has taken some confused steps is what it is, but maybe there could be a logic to it and we'll find it on our own way. While you implement something in a country of 140 150 crore, these would be certain kind of problems which are bound to come. But as a standard, I am the person, or Kuldeep is the person who advocates most on this standard.
Last question, Ankit ji, on behalf of all of us, that I think you will be able to answer it very well because you have done it for many type of these companies. Applicability of ESG disclosures in private limited entities and why it is relevant. If there is a CFO of a private limited entity, why, or the owner of a private limited entity, why or how an ESG disclosure related thing becomes important, and is it applicable?
I am, Kuldeepji, there would be, I think, 30-40% of whatever we together do, we do it for SMEs, right?
Correct.
The logic one,
Hmm.
there's a clear investor mandate which expects you to be on sustainability and compliance to sustainability.
Agreed.
And every authority has a guidelines. A laboratory has NABL, a hospital has NABH, a bank has RBI, right? They talk about climate risk. So this has become completely applicable. And it depends on the kind of operations you are into. If you're a chartered accountant firm, genuinely you are not very aligned to emissions and all. But if you're a doctor, you have a lot of biodegradable hazardous waste, and there has to be something which needs to be done to it. So it depends on industry, but an investor mandate, your local regulatory mandate, you being a partner of a value chain partner, and you are expected to report it. Even if I and Kuldeep do a business for a multinational, you find that these multinationals send us these long forms, right? And we have to fill them, report it, calculate it, demonstrate our policies to work with larger enterprise. A motivation for a smaller entity is if you have to work for the larger enterprise, you have to do it. You are forced to do it.
Correct. So you've rightly answered all these questions and you have settled all the queries which the participants had. So I think we are done with today's session. Not done with the topic because there is a lot of discussion which is
So
pending.
we'll come back.
Yes,
We'll come back if
we'll
the committee permits.
So with these words, I think if there is anyone from the committee who is available to propose vote of thanks, or we can close it. Lakshit, Nishi, you are available?
I don't think so. Let's thank each other and thank the audience who have gone with us for 2 hours.
Correct.
And they have been, great in putting up questions. I received a lot of questions, but was not able to, put up in the flow of the session. You can write mail to us, right? Connect through us through LinkedIn and email us. We promise you to answer all your queries. That's it. I think. Thank you so much, Kuldeepji, for
Thank you.
being a wonderful partner, and thank you to all my learned audience to
Thank you.
be here, and hope we justified your 1 hour 30 minutes. Thank you so much.
Thank you, Ankit. Thank you, the secretarial team of CMIB and the leadership for giving us this opportunity. We have a very great start to the season, and there is a lot to come. We'll be willing to hear you more, Ankit, on these new evolving and burning topics. So looking forward to it.
No, I would want you to be on SEMA. I would want you to be on SEMA. You are an expert to it.
Sure.
And Kuldeep has been a modest co-speaker, but we love each other's company. Thank you so much.
Thank you, sir. Thank you, everyone. Bye.
Bye.